Hey, what's going on, guys? Your everyday options trader here, coming to you live with a video overviewing my personal options strategy. In this case, this will be my swing trading strategy. You can see here we are on SPY on TradingView. Now, this is the 2-hour chart. Now, as far as the indicators go, let me black these out here right quick. Now, basically, originally I had it set up on a standard candlestick chart. However, I found that the Heiken Ashi candle chart does actually work better. So you're going to have your Heiken Ashi candles. That's just going to be accessed by going in here and selecting Heiken Ashi. I probably favorite that one. Now, the indicators you're going to be adding are going to be your smooth Heiken Ashi candles. That's this one right here. You can see it does actually clean up the flow of it pretty well. Now, all you're going to do for that is you're simply going to go into indicators, type in smooth, right here, Heiken Ashi candles V1 by Jack. 4230 downloads. Probably will have more by the time this video is up. So that's going to be your first indicator. That will populate on the chart like this. Now, as far as the settings go, I did leave them the same. That's how I have my style done. Inputs 10 and 10. If you guys do have a better input for it, let me know. Again, I do like these swing trades because it does work a little bit better for a smaller account. Now, uh, your next indicator that we're going to use is called the Harsey. Now, this is a little lesser known, but you can see it does show a little more of the flow of the option. Now, basically what this does is it's going to show more or less the trend being either overbought or oversold, which are dictated by these two areas. And then anywhere in here, um, obviously, is normal, quote unquote. Right, nothing being normal, especially these days. So the criteria I'm looking for here for long entries would be green on green all the way around for both the confirmation or the initial candle and the confirmation candle. So that would pass because these are both crossing. But let's get a little more into this Harsey indicator. So to add that in, you're going to type in HARS and if I can spell correctly today, and it's going to be this one down here by J. Rogers. Now yours, I'll click on this one so you can see, yours will look a little wonky. Yours will look like this, not like this. But basically what you're going to do is you're going to go into your settings here, and your input should look like this. Now, again, if anybody has a better setting for this, let me know. Something to help with the profitability of it. Always great as well. Throw it in the comments. So what you're going to do over here is you're going to uncheck the RSI histogram. That's going to clean that bit up. The RSI shadow and the RSI overlay. So that's cleaned it up pretty nicely here, and now they look more or less the same. So we'll exit that bad boy out, and now we can see we have a complete chart looking like this. So as far as the qualifications for entry goes, um, so basically my qualifications for entry, let me see if I can't drag this over here. There we go. Okay, so my qualifications for entry. This is, as you can see, we're on V1.5 here. Have been doing this full time for about 2 months now, so it is coming around. So my qualifications for entry, we have for new uptrends. So we're going to wait for the confirmation candle. That is going to be the second green candle. So green on green on green. Smooth HA candle to close above the smooth Heiken Ashi indicator. So obviously you want it above that indicator when it does close, very important. So what that's going to look like is like this. So you have you've got a red here, you've got a green smooth Heiken Ashi candle right here. So of course that is above, and then your second right here, also above, and also green on both sides. Now going back to it, so your second qualification, you're going to check that both the initial confirmation smooth, or excuse me, initial and confirmation smooth Heiken Ashi candles are green and clearly touching or crossing the Harsi. This should not be long enough to be greater than plus or minus 20 because that is your overbought, oversold territory. So I'll show you what that looks like here. We'll go back. So your Harsi, right? Remember, that's our red. This is our first green entry. This is our second green entry. It needs to be covering that center line. So let me zoom in a little more here. You can see, so we have the initial green. That one is clearly crossing. That's good. And then you have your second green also clearly crossing. So that box is checked. Now, going here, obviously, both HA actual price candles or your chart candles should be green, which we already checked. That's good to go. If one of them is red, that immediately disqualifies it as a trade, or on the opposite direction, green. And then this pertains to my options contract, so as close to money as possible, but no more than 1% away from the last candle close price. So obviously, if the last candle closed at $100, I would buy a call for $101. Obviously, other general rules just for options trading, please do not trade within 3 days of earnings. Very important, high volatility, unless you know for sure or you're doing spreads or there's different things that work good for earnings, but this is not those times. And of course, we are coming up on earnings season, so that is very important. Now, this is one thing I've kind of also adjusted a little bit. So, ideally, I'm looking for week out expirations, right? I don't want it to be too close to expiration to where all my time premium is ate up, but I don't want it to be too far to where I can't hit my target profit. So 1 week is generally the sweet spot. You can do two if you want to be a little more conservative, but most of the trades, like I said, are activating usually within 8-ish 2-hour candles, so two trades. That I'd say activates about 85% of the trades. Now, as far as your exit stop loss, so your take profit for contracts set overnight. Actually, I should change that because it needs to be 30%. I adjusted that today after some more back testing. Oops. Okay, so that's where I set my take profit overnight. Sometimes it does sell for more, it never sells for less, of course, because that's your limit price. And I do sell quite a few candles right at the open, so that's pretty good. Now, your stop loss, quote unquote, you can't technically set on Robinhood. I do use Robinhood for my stuff. Don't hate on me. I use Webull for my day trades, just so I can keep it a little separate. So at your trend reversal, so that would be two smooth Heiken Ashi candles of opposite color. So if you remember, for that long scenario, you want both your Heiken Ashis to be green. As soon as that second one closes, that is a trend change. So that is your stop loss. And then the third, obviously, if there is no trend change, it's going to be 10 candles have passed. So your 10th candle close from the trend start, that is including the first and second, so your initial and confirmation candle, and that is approximately 2.5 trading sessions. Now, other important things, just general rules that I follow: no more than 75% of the account used in one day. 80%, that is in the case where I do have a trend change or reversal in that one day. So let's say I bought calls on PayPal on that 8:30 candle, and by that 12:30 or the 1:30 candle, it was in a trend change, so it had flipped to red. I would buy puts, and since this is a swing trading account, I could use one of my day trades, but I also could just let it roll to the next day or potentially hope down the road that I may go into profit, which is why we do buy it further out from expiration. This strategy pretty much The only thing you should be checking during the day is to see if there's a trend reversal, which you can probably set up alerts for. I am not that advanced, so somebody let me know if you figure out a way to do that. So basically, you're just going to enter the trade, you're going to set the take profit, usually that night, once the market closes, and then you're going to leave it be. So the only thing you should be checking for is trend reversals, following rules above for inverse trades. So again, trading view indicators, you have your smooth HA candles and your Harsey on that 2-hour time frame for these swing trades. If you guys do have a better time frame that works a little bit better, I am open to it as well. Leave it in the comments below. A few more things want to discuss. So we kind of saw here what a false entry looks like. You see you have that green candle, which would have prevented. Now, there's also the circumstances like this where you would have technically missed out, but again, it wouldn't have been a trade entry anyways. So it does cut out, oops. I'm sure that happens to you guys all the time using TradingView. Happens to me all the time. So there's a lot of times where it does cut you out of some profit, but it does cut out more losses than not. And you can see it does actually work pretty well. Really nice entries, really nice exits. See, this one would not be a trade. You would have lost out on that one. But, I mean, not bad. Again, I'd say you'd average about a trade a week per stock with this one, depending on which stocks you follow. Of course, you do have some, as you can see, like here, that was a really, that was like almost a 2-week downtrend there, and a couple day uptrend. See, this is something like this. It does have failed trades, right? So you would have initial confirmation, you would have entered here, more or less, on that 12:30. Then you have the 2:30. Now you might have been able to exit here. So in theory, it could or could not have been a passed or failed trade, but you never know. Again, so none of this is investment advice. I just like to share my strategy and hopefully help some other people out in the process, because I know information is hard to find. But it flows very, very well, which is good. And it does work on other stocks too. Here we'll pull up, get back to the beginning. So let's look at something a little cheaper like Coke. So Coke, you can see obviously if I scroll out, a little bit lesser of a price movement, but you can see like even here, so we've got that green trend dying out. You can see these flatter candles here. I believe they call these doji candles. Pretty cool. Um, Now you can see it's actually starting to turn to a red. So you have that first red here, second red. Now this technically wouldn't be an entry. So that green trend might take back over. You can see it's actually starting to engulf here. When it starts to cross over this, that usually means one of two things. Either you're going to shoot up or you're going to shoot down, or move up or move down. It's never going to stay the same. That's not really an indecision period. And I'm sure I can find an indecision period. So something like this, you can see it's a little bit of a mix of green and red in here. But again, that's where this comes into play. And of course, the two candles also come into play. See, really long uptrend here, downtrend here. Something like this. See, it does have failed trades right here. But see, I probably wouldn't have entered this one anyways, because you can see it is actually oversold at this point, which is probably why we had that rejection there. That's February. I can't really remember what was going on then. But yeah, I mean, basically, it does cut out a lot of the noise. It's not 100% accurate strategy, but it does work pretty well. And again, like I said, if you guys find anything that when you're playing with it that works maybe a little bit better, I'm open to adjustments. Leave it in the comments below. See, it does work pretty well on just about everything. Really good ebb and flow. Let's see. So that would have been a entry there, but you had a trend change. It crossed over. So that does happen sometimes, but then you can see that's not actually a trend. If you would have held it long enough, you still would have made out. And a lot of times that is what happens. But you also have to look at the majorative trend as well and just kind of see. And again, here's my rule: 3 days from earnings. Right, you had your earnings here, May 12th. This weird thing happened on the 17th. There was a weekend. So, I mean, would I have taken that trade? Probably. But like I said, it's not 100% perfect strategy. There's plenty of times where you can just literally ride the downtrend, and it's beautiful. But more or less, yeah, that's my strategy. Let me know if you guys have any further questions or anything I can help you out with. Reach out to me in the comments, and I'll try and get back to you as quickly as possible. Thank you again. I'll see y'all in the next video.